Over the last 3 years, the United States has seen inflation rates of 7%, 6.5%, and currently 3.7%. So the reality is, even if you own dividend stocks that are increasing their payouts, if they aren't increasing the payouts higher than the rate of inflation, they are technically paying out less in dividends. Take Verizon for example. Verizon has been increasing their dividend payments for nearly 20 years in a row. But if you look at the 3, 5, and 10-year dividend growth rates, they are all sitting around 2%. Far below inflation. So in this video, we're going to be reviewing 3 stocks that have just announced dividend increases, with 2 of them having increases of around 10%, clearly beating inflation. The first company that we're going to be looking at that recently saw a very nice dividend hike is none other than Microsoft, stock ticker MSFT, and this is actually the second largest position in my personal dividend portfolio. You can see right here, it currently makes up around 9.3% of my portfolio, and if we look at the growth of that position, it's actually been pretty good as well. I'm currently up around 25% on my Microsoft position. So far so good with Microsoft. Now, if we look at the most recent dividend increase, we can see it came in at around 10.29%, with the 2022 dividend payment quarterly being around 68 cents and the new one being 75 cents. And if we look at the history over the past 4 or 5 years, they've pretty consistently been increasing that dividend around 10%, and it's been an average of around 10.27% over that time period. So very solid dividend growth over a pretty good time period. If we dig into the dividend history for this company, we can see they have increased dividend payments for 18 consecutive years. We'll zoom out and look at that dividend history, and we can see 10 years ago, they were paying out around 23 cents per share every single quarter, and jump forward to now, it's now sitting at 75 cents a share every single quarter. So that is really, really good dividend growth. Let's go ahead and look at those dividend growth rates. And again, pretty close to 10% for the 3-year, 5-year, and 10-year dividend growth rates. Now, the problem a lot of people have with companies like Microsoft, especially tech companies, is the low starting dividend yield. We can see if you were to buy in right now, your starting dividend yield would actually be a little bit below 1%, sitting at 0.91%. But when you combine that with really solid dividend growth over time, you'll see your yield on cost continue to grow. Now, if we look at the dividend safety for this company, look at the cash flow payout ratio. This is my favorite payout ratio to look at. You can see the trailing 12 months is sitting at around 23.2%, and the forward-looking cash flow payout ratio sitting at 20%. That means 80% of their free cash flow is left over to do things like reinvest back into the business, pay down debt, or even buy back shares. So that is a very healthy cash flow payout ratio, and it makes me think that 10% dividend growth will be sustainable for quite some time. Now, if we jump into my stock valuation spreadsheet, we'll go ahead and dig into our dividend discount model. I'll zoom in a little bit right here, and you can basically see I plugged in the quarterly dividend payments for Microsoft over the past few years. So we can see those yearly dividend payments. We've already discussed it has been sitting at around 10%. So over the past 4 years, an average growth rate of around 10.12%. So moving forward, I'm projecting a dividend growth rate of 8.25%, discount rate of 9%, and that gives us a dividend discount model price per share of $433 a share. The second company that recently saw a very nice dividend hike is actually a company I haven't talked about on the channel much, and that is McDonald's Corporation, stock ticker MCD, currently trading at $252.56 a share. They recently saw a dividend hike that was close to around 10%. You can see their previous dividend was sitting at $1.52, but they are now paying out $1.67 a share, and we can see they now have a starting dividend yield sitting above the average for the S&P 500 at around 2.67%. So that is a decent starting dividend yield. Let's go ahead and dig into that dividend history. If we scroll down, we can see they've been increasing dividends for around 21 consecutive years. And 10 years ago, it looks like they were paying out around 77 cents per share quarterly, and jump forward to now sitting at $1.67. So pretty solid dividend growth. Let's go ahead and look at the dividend growth rates. Actually, scroll down, we can see the 3-year, it has slowed down a little bit. It's sitting at around 6.74%, but the 5-year is pretty solid at around 8.52%, and the 10-year sitting at around 7.4%. So it does look like this most recent dividend hike was actually a little bit higher than their average over the past few years. Now, if we look at the dividend safety, we'll go ahead and scroll down. We can see the cash flow payout ratio for the trailing 12 months actually sitting quite a bit higher than I would typically like to see it at around 58.43%, but the forward-looking cash flow payout ratio is a little bit healthier at around 44%. Again, typically I'd like to see it a little bit lower for a company whose yield is only sitting at around 2.67%, but it's not necessarily a red flag. I definitely think the dividend payments are still very safe, but if you want to see very long-term sustainable high dividend growth, I think they are going to have to continue to increase their free cash flow at a pretty high rate. Now, if we jump over to my dividend discount model, and like always, if you'd like to be able to download any of my spreadsheets, you can head over to my Patreon page at the link in the description. But again, I plugged in this quarterly dividend payouts over the past few years, so we can see the yearly dividend payouts. We have 3.2, around 7%, 10.14%, and the most recent at around 9.87%, average growth rate of around 7.55%. Now moving forward, I think it will be a little bit lower than that. I'm projecting a dividend growth rate of around 5.75%, discount rate of around 8.5%, and that gives us a dividend discount model price per share of $256.88, which is really right at the current trading price for this company. The third and final company we're going to be looking at that just increased their dividend payments was Lockheed Martin Corporation, stock ticker LMT, currently trading at $435.25 a share. Now their dividend increase wasn't quite as high as the other two companies we just looked at, and came in at around 5%. They increased their dividend payment from around $3 a share to $3.15 a share every single quarter, but it's also worth noting that the board authorized the purchase of up to an additional $6 billion in Lockheed Martin common stock under a new share repurchase program. So that is something to keep in mind as well. That's just another way to use your free cash flow to reward shareholders. Now, if we look at the starting dividend yield for the company, we can currently see it's sitting at around 2.89%. So that's a pretty solid starting dividend yield. We can see over the past year up around 9%. Year to date, they're actually down around 9%. But if we look at just the past few days, we can see there was a pretty large spike up in their share price. And if you've been keeping up with current events and know much about this business, it's pretty easy to know exactly why that happened. Now, if we dig into the dividend history for this company, we can see they have been increasing dividends for 20 consecutive years. 10 years ago, they're paying out around $1.15 a share quarterly, and jump forward to now sitting at $3.15 every single quarter. So if we look at the dividend growth rates, we can see it's pretty solid overall, with the 3-year sitting at around 7.72%, 5-year 8.45%, and the 10-year actually sitting at over 10%. So that's a pretty good dividend growth rate over a 10-year time period. And if we look at the dividend safety, I'll scroll down, we can see the cash flow payout ratio for the forward looking is sitting at 37%. I think that's a pretty healthy place to be. So if we go ahead and jump into my dividend discount model, you can see here I've plugged in the quarterly dividend payments over the past few years, and it looks like it has been trending down just a little bit. We had a year with 8.33%, a couple of years with around 7 to 7.5%, and the most recent dividend increase sitting at 5%. So that's an average growth rate of around 7%. I do think it's sustainable for them to have a dividend growth rate long term of around 5.5% and a discount rate of around 8.5%. That gives us a dividend discount model price per share of $443.10, which is again pretty close to that current trading price for them of around $434.07. So there you go, those are 3 companies that just had very nice dividend increases. Like always, if you'd like to be able to download any of my spreadsheets, then you can head over to my Patreon page at the link in the description. You can also get a coupon and a 7-day free trial to Seeking Alpha at my link in the description, so be sure to check that out if you're interested. But with all of that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.